Bitcoin was a sell the news event, essentially. Initially on the approval the day before, there was very little movement. But as we got closer to the stock market opening, people got very excited. The ETFs were going to be into trade. And it seems like that, once they started trading, you saw this pop on Bitcoin, and then it topped out and reversed. Yesterday, Bitcoin did put in a daily topping tail. Okay, now daily topping tails, they don't give you absolutes, right? It doesn't guarantee that Bitcoin's going to go down. It changes the odds.
Hi, crypto friends, the most mind-blowing crypto scoop to light up your screens like no other. Hit that subscribe button and buckle up. The drama is reaching new heights. Let's break it down. So Bitcoin, it's been a sell the news roller coaster lately. Initially on the approval day, things were quiet. But as we approached the stock market opening, excitement peaked. Bitcoin experienced a thrilling surge followed by a reversal. What caught our attention was the daily topping tail formed by Bitcoin. Now, this doesn't guarantee a downward spiral, but it sure raises the stakes. Now, let's continue our discussion with Gareth Soloway.
Bitcoin, guys, Bitcoin was a sell the news event, essentially, right? So, basically what we saw on yesterday's action is that initially on the approval the day before, there was very little movement. But as we got closer to the stock market opening, people got very excited. The ETFs were going to be into trade. And it seems like that, once they started trading, you saw this pop on Bitcoin, and then it topped out and reversed. Couple things to note here. Number one, we did hit this longer-term trend line on Bitcoin, right? So again, if we look at this, we can see very clearly this 2019 high through the lows of the bull market, and that's the high pivot now on the market. It was also a classic perfect 618 Fibonacci retrace. So again, multiple levels. And by the way, you can go back a month ago. I was talking about, listen, Bitcoin probably traced to 48 to 50,000 before a pullback. Yesterday, based on that reversal, and this is important for us as technicians, right? Let me remove these lines. Yesterday, Bitcoin did put in a daily topping tail. Okay, now daily topping tails, they don't give you absolutes, right? It doesn't guarantee that Bitcoin's going to go down. It changes the odds. It tells us, okay, we now have this candle, which is a topping tail. We now can say that there's a higher probability than not, maybe 60-40, that Bitcoin is short-term put in a high, and it may trade back down. Where would Bitcoin have first technical support? I'm going to show you guys right now on the chart. Let me just zoom in a little bit. We're going to take this line and drag it right up here. And this is kind of my zone right now. So again, look for Bitcoin. Bitcoin can trade down to about, let's see, what price is this here? 43,000, 42.8, right in that vicinity. And as long as it holds this longer term trend line, I think it's fine, no big deal. But if it breaks that 42.8 and trades below, you're probably going to 38,000. And then if that breaks, then we have to start talking about potentially 30,000. That might sound ludicrous, but again, I'm a technician. Unless 38 breaks, 30,000 really is irrelevant. If that breaks, then we start looking at the charts and gathering the data. Gold today, big move on gold, guys. Gold is starting to pop to the upside. I think this is game time on gold. I think this next move up is going to blow right through this level on gold and move us well into the 2100 range and above. So again, nice gain today, 2056. The key is going to be a daily close above 2075 and a confirming move the next day, and then it should be off to the races. People are very underinvested in gold right now. Very, very underinvested. While the central banks have been accumulating trillions of dollars in gold. So just keep that in mind, is that there's an underinvestment. They will chase. Once the breakout comes and once you see the headlines hit, people will start to chase this gold trade. I do think, again, by the end of this year, we could be talking $2,500 in gold.
Let's highlight some of what Gareth said about Bitcoin. Was it just another sell the news event? Absolutely. Minimal movement on the approval day, but as the stock market gates opened, excitement soared. ETFs entered the scene, creating a spectacular Bitcoin surge, only to hit a peak and reverse. Now the intriguing part, we had a crucial long-term trend line on Bitcoin, marked by the 2019 high through the bull market lows. It coincided perfectly with a 61.8% Fibonacci retracement. These are not just lines on a chart, they represent key levels. About a month ago, we hinted at a retracement to $48,000, $50,000, and yesterday's reversal affirmed it. But here's the clincher. Bitcoin formed a daily topping tail. No guarantees, but the odds are now tilted around 60 to 40, suggesting a potential short-term high. Where's the support? look around $43,042, and as long as the long-term trendline holds, we're fine. However, a dip below $42,800 could spell a journey to $38,000. Brace yourselves. Now, let's pivot to gold. Today it made a significant move, hitting $2,056. But here's the forecast. A daily close above $2,075 and a confirming move the next day could propel gold beyond $2,100. There's a gold rush on the horizon, and the underinvestment in gold, coupled with central banks accumulating trillions, makes $2,500 a plausible reality by year-end.
So PPI came out today. Now the PPI, remember, is Producer Price Index. Yesterday we got the CPI data. The CPI is Consumer Price Index. Basically, CPI is inflation on the consumer side, the you and me side. PPI is the producer inflation on the wholesale side, on their side, on the people that are producing goods and making goods. Okay, so today we are looking at the PPI data. Now, yesterday the CPI data came in hotter than expected. However, we're seeing a reversal on the producer side. In other words, forecast was for a 0.2% increase in producer prices, or PPI core, and we saw zero. There was no increase in producer price on the core side. And again, core is excluding food and energy, right? So on the regular PPI, which is including food and energy, we were expecting a 0.1% increase. Look at this, guys. Negative 0.1%. Negative, meaning prices on the producer side overall did downtick just a little bit. Again, is this deflation? I don't buy that, and I'm going to tell you why. So the question is, on the producer side, sure, maybe deflation. Will they pass it along to the consumer? My guess, and from history, we know that once they raise prices, once prices of goods are raised, they do not want to lower those. And also, remember, I just heard Elon Musk was raising salaries for some of his Tesla employees. We're still seeing wages going sideways to higher on a continual basis. So again, I would love to tell you guys that deflation, and listen, deflation on an economic basis is usually a scary thing. I love deflation. Like, if you're going to let me buy gas for less than it was a year ago, I'm all for that. I think we all are. But obviously implications on what does it mean inside the economy are a different story. Okay, so here we are with our PPI data today broken down. Again, we're seeing the market reverse the moves from yesterday. So remember that the market was generally lower yesterday because rates, interest rates, as well as the dollar went higher. Well, if we take a look at what's going on today, let's do that right now. Let's jump right in. This is the 10-year yield. Let's go right to that. The 10-year yield on the back of this news. Again, remember yesterday. In fact, let me show yesterday here. Let's zoom out. Okay, so look at this. And by the way, this shows you that, again, you know, it's questionable what really was taken into impact yesterday. But on that CPI data that was hotter than expected, higher inflation than expected, look, we saw the move up in rates. We went as high as about 4.07% on the 10-year. All right, then the markets were like, nah, we don't buy it. We're jovial. We think everything's fine. The Fed's going to cut rates. And the markets kind of came back down on the yields, and we kind of settled in. We were upticking again going into the CPI data, or the PPI data, excuse me. But then look at that, right back down because, again, no inflation on the producer prices. And again, what does the market do? What do we know about the market? When yields come down, markets begin to move higher. So initially pre-market, we were actually down pretty sharply on the S&P, the NASDAQ. The NASDAQ futures, in fact, were down about 100 points, which is a decent drop. But again, as soon as this news came out, the NASDAQ began to rebound, the S&P was rebounding, and everything seems hunky-dory going into the weekend. All right, so let's go on to the next chart here. The dollar again, you could see same thing. The news came out. Again, it's dovish. It means the Fed. If we are seeing, and again, this is a big extrapolation. If the PPI data does get translated over to the consumers and we actually see inflation at zero or even negative, what does that mean for the dollar? It means the Fed can print potentially money again, which means a weaker dollar, and the dollar reacted to the downside.
Time for a swift transition into the economic realm. PPI, or the Producer Price Index, took the stage today, contrasting yesterday's Consumer Price Index, CPI, fireworks. While CPI hinted at inflation, the PPI core was surprised with a zero increase, indicating stability on the wholesale side. Yes, we're diving into the nitty-gritty of economic indices. On the consumer front, wages are holding steady or edging higher, signaling a disconnect from any potential deflationary fears. Despite producer prices nudging downward, don't let the D word fool you. It's a complex puzzle. Market-wise, yesterday's worries about rising interest rates and a stronger dollar took a 180-degree turn today. The 10-year yield dipped as the PPI data favored a dovish outlook, prompting markets to rebound. The dollar mirrored the sentiment, sliding as expectations of potential inflation took a hit. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.